I mean, the main key here is that investors are emotional, right? As you know, human beings were emotional. So you hear that, and the jerk reaction is like, "Holy cow, we didn't expect that," and then you create this selling pressure. But in reality, my guess is within 2 months from now, we're all going to start. Even retail investors will start to realize.
Many analysts and pundits have been calling for a downslide in the economy, and the recently released job reports are right on target to support the consensus thesis. The economy added 315,000 jobs, which is slightly below the 318,000 predicted by the Dow Jones, but it's well below the 526,000 jobs added in July, and is the lowest number of jobs added since April of 2021. The unemployment rate rose to 3.7%, 0.2 of a percentage point higher than expectations, largely due to a gain in the labor force participation rate to 62.4%, tied for the highest level of the year, according to CNBC. Wages continued to rise. Average hourly earnings increased 0.3% for the month and 5.2% from a year ago, both 0.1 percentage point below estimates. The markets reacted with a slight downturn as Bitcoin trades for $19,909, down 1.2% in the past 24 hours, and Ethereum is down just under 2% in the past 24 hours, trading for $1,561. The downturn in the economy, along with crypto, is a combination we should expect, according to trader Gareth Soloway. But according to Garret, by the end of 2022, we should see big reversals in crypto, specifically Bitcoin, as many will see Bitcoin as an asset that can combat the lack of options from Federal Reserve. As a guest on RICE TVx, Soloway discussed what he sees coming for the fourth quarter and when he can expect to turn the corner toward bullish action. But before we listen to Gareth, if you're not subscribed, make sure to subscribe as we put out daily content to keep you up to date on the current market.
First of all, we've seen this big rollover today in the afternoon. So this morning, the markets, equity markets, Bitcoin, we saw some big rallies taking place on the back of the jobs report. So the jobs report, for everyone out there, basically came in just perfect for what the market wanted. So the number wasn't too hot, meaning it wasn't too strong, it wasn't too cold, it wasn't too weak. It was kind of right in that middle section where you saw people coming back to the workforce, unemployment creeping up just a little bit, but the jobs still were created about 300,000, a little bit over that. So I think the market liked that initially. And then, lo and behold, and this is always the shady part of Wall Street, come noon in the early afternoon, we get a rumor about something with Nord Stream 1, the pipeline from Russia, and like this. And then all of a sudden the market's just dumped out. And again, I'll show my S&P intraday chart, but I mean, this was an epic reversal. We opened up, we rallied, we were up over 1% on the S&P, and then look at what happened there. We've had a little bit of a bounce here, but again, notice how this is going into a holiday weekend. A rumor like this basically doesn't make anyone want to buy going into the 3-day weekend, at least for the stock market. Now, you could trade crypto, obviously, over the weekend, but for the stock market, this made people nervous. We saw the sell-off, and Bitcoin, of course, as a risk asset, followed suit. You can see the same sell-off right there and the little bit of a bounce right here. So I think the bottom line is that, we'll have to see how things go. I was a little disappointed in this kind of reversal today. It looked like maybe Bitcoin was going to climb off of this major support here, which is the 2017 highs. Earlier today, it was kind of testing that 20,500 level again. And then today, again, by the afternoon, we find ourselves just below 20,000. So if you look at it from Jerome Powell's viewpoint, he has to continue to keep pressure on the stock market to not let asset prices kind of advance. Remember, when asset prices go up, people feel richer. They're more willing to spend more money, which is exactly what he doesn't want right now, because that's going to make inflation go up versus down. So he wants people to kind of lose money in assets, because then they're like, oh my goodness, I can't go out and buy a new car. I can't go buy a new fridge. And if he were to say, hey guys, we're coming to the end of this tightening cycle, soon we're not going to tighten anymore, I mean, this market would just rally like crazy and it would work against him. So he's got to talk a tough game, even if secretly I think he thinks like, okay, I have to be careful here because I can't print our way out of the next recession like I have in the past. So he has to be careful what he says and kind of talk a tough game, even if he doesn't believe it deep down. Interest rates at this point, there's no way they can go back, because you have so much debt that needs to be rolled over. Not just, by the way, not just from the government. You're talking about corporate debt too. I mean, the main key here is that investors are emotional, right? As you know, human beings were emotional. So you hear that and the jerk reaction is like, holy cow, we didn't expect that. And then you create this selling pressure. But in reality, my guess is within 2 months from now, we're all going to start, even retail investors will start to realize. And my guess is you're going to get a 50 basis point hike in September, 25, one of the next meetings into year end, and then that's it. I think that's it. I don't think that they can jack it much more than that. Otherwise, like you said, you're either going to crash the market and you're going to cause a default situation that they're aware. I mean, it's like kind of do what I do, not what I say kind of thing. Like it's one of those things where they have to talk that tough game because they're trying to bring down inflation with all the powers that be. And verbal is one of those things, talking, right? So by talking it down, they can bring it down, and then maybe they don't have to crash the economy fully like we fear. So starting really around like October going into November, where you have Black Friday, all that stuff, you'll see a lot of just natural hiring. But if you just pay attention to what's going on Wall Street, like Snapchat just announced they're laying 20% of their workforce off. We've heard so many other companies, and it's not like those companies are isolated. So those are just corporate ones that have to do it because they have their stocks. There are tons of businesses in the US that are thinking the same way. And so it's coming. It's going to be a wave of layoffs. And you're going to see, like you said, I think you're going to see generally maybe just a slight weakening for the next few months. And then it's going to kind of catch up to this market. And one thing to remember about the employment market is it's a lagging indicator, right? So when the economy starts to get a little rough, business owners don't right away say, oh, we had a bad month, let's fire everyone or let's lay off everyone. They say, well, maybe that was a bad month, let's give it till next month. And then they say, oh, okay, one more month. Okay, now I have to finally lay people off. Because obviously they don't want to lay someone off if it was just a fluke of a month and then they have to hire someone new and train them, right? So, I mean, just looking at the Bitcoin charts, I mean, basically there's an easy level for everyone to follow. It's this trend line right here, which is around 19,500 to 600. And the reason that, again, is a major level, it's the last peak cycle high, right? So 2017 high, we did that full round trip back to that level. Over here, we kind of came into it. We pierced it briefly, stopping out the stops that had bought right above there, and it then floated up. Then you broke down again. So the question is, to me, there's not a question of if Bitcoin's still going to go lower or not. It is. The question I have is, does it bounce first to the upside before rolling back over and heading lower? But again, I'm in the camp where you have a situation where this is a bear market 4-year cycle in Bitcoin, right? There's no denying that. We've been in a 4-year cycle now since 2009. And this is the first cycle for Bitcoin where you don't have Fed printing money at this point, at least. And so to me, it doesn't make sense that the cycle would be over already with only a 70% drop versus an 80 to 85%, which is what we usually get in a bear market in Bitcoin. In fact, with the Fed lack of printing, you could even argue this could be the worst bear market we've experienced in crypto since its inception. I think Solana was looking really good earlier today. I mean, it was starting, it's holding this key support line. And again, it'll be interesting to see if it's able to get off of this line. But just like Bitcoin, it's kind of holding that big support line. Avalanche, same kind of situation there. Both of these were looking better. Now they're kind of stalling out a little bit, both in the lower ranges of the chart. But again, I think at this point, it's important to just take it very carefully. Like if you're swing trading cryptos, I think that's fine to do like a Solana, an Avalanche, a Cardano, a Polkadot. But if you're looking longer term, stick with the best of breed with Bitcoin and Ethereum, because you just don't know which ones are going to survive the regulation, right? We know that Gary Gensler has said, you know, except for Bitcoin, most of these are securities. What does that mean? What kind of regulation are they going to have to abide by? And then will other technologies from other coins take better precedent? Will they take over as well? So for me, when I'm looking at my long-term HODL portfolio, I'm trying to stick to the best just to be safer.
To watch the full interview, check out the link in the description. What do you think of Garrett's thoughts here? Will we see Bitcoin turn bullish by the end of 2022? Leave a comment. If you found value in the content, hit the like button, as that greatly helps our channel reach similar viewers like you. If you're new to the channel or not subscribed, make sure to hit the subscribe button, as we put out daily content to keep you up to date on the current market and news. Thanks for watching. We'll see you in the next one.